Avinnash Gorakssakar is joining us this morning. Avinnash, good morning. Thank you so much for joining us here this morning. Just wanted to check with yesterday's FOMC statement. US markets went down. Of course, there was no major reason for that, but it just tells you that good news or bad news, markets will be sold into.
No, I think more or less, Pankaj, I think the news which came out yesterday from the Fed was largely discounted by the market. So probably that was the reason, markets sold off marginally. But I think from the Fed commentary, it clearly looks that future rate hikes are not going to be very easily possible. I think looking at the kind of slow pace in the economy, I think even the March or maybe the June possibility now looks little remote because macro numbers are a bit weak, and I think Friday numbers, which possibly will tell you what kind of data comes on the GDP front, will give you a clear picture as how the US economy has progressed. So I think overall net it's a good call, at least for the emerging markets, because to that extent, that fear of the rate hike coming in very soon has now diminished. So probably I think anything which happens probably will happen in the second half of 2016.
Right. And do you think markets in the interim may not even react to results? Is that something that you believe? I mean, it's a risk-off trade. So whether they are great results or unless they are exceptionally great results, you don't see major buying coming in?
No, I think unless the results are really good, like, one or two which came in yesterday, like Powergrid or SKS Micro, I think these numbers were much better than what the street expected. And you would definitely see a bit of spike today. I mean,
right.
Obviously,
Avinnash, just talking about that point, do you think the markets are changing? In the last 18 months, it was all about expectations and, how companies would grow, was getting higher multiple. But now you think companies that deliver will essentially get higher multiples?
No, exactly, because if you look at the broad earnings growth story, Pankaj, I think now it's got more of back-ended, and I think whatever earnings growth expectations were there for FY16 have actually got evaporated, and even in FY17, our sense is that earnings growth could not be more than, say, 12-13%. So if you talk about Sensex earning of around 1,500 rupees for FY17, I think markets are fairly valued, and I think stocks specifically, wherever there are good earnings surprises, especially, from stocks which are, leading market favorites, I mean, you'll probably see more of stock specific activity based on the earnings growth.
Right.